Welcome for today's webinar for homeowners or future homeowners. We will see together what's changing in 2025 regarding real estate to help you to save on taxes. So let me present myself very quickly. My name is Patrick Malgi. I'm co-founder of taxx.lu, the website that we started in 2018 that helps everyone in Luxembourg to file their taxes in the most easy way. During the entire webinar, you will see a QR code on the left of the screen. Basically, by scanning this with your phone, you can book an appointment. So one of my team can call you back and can help you to optimize your tax situation and to save on taxes. So when we are talking tax optimization, basically the most important is to understand how this works in Luxembourg. So on one hand, you have different deductions of expenses that you can claim on the tax return. A tax deduction does not equal the tax saving. So basically, a deduction means that through this deduction, you can save on taxes, and the tax savings here they are based on your income, basically. To make it easy, the more you earn, the more you can save, also by deducting different expenses on the tax return. An example is in French, but however, I think it's understandable. So basically, for a single with a salary, a monthly gross salary of 3,000 euros, we are at a marginal tax rate of 21%. For a single with a gross monthly salary of 7,000, we are around 42%, and someone earning 12,000 euros gross a month, it's at a marginal tax rate of 43%. Why is this important? Basically, the marginal tax rate gives you information about how much you can save through a deduction. So for example, this person with 12K gross monthly salary, by deducting 1,000 euros on his tax return, he can save 430 euros in taxes. So today we are focusing on basically real estate, and basically the focus will be also on your primary residency, so basically your home. Most important here, or most important deduction here, if you have bought a home and you have a loan, a mortgage, then you can deduct interests on your tax return. Before 2023, basically for every, well, let me start differently. For every deduction on the Luxembourg tax return, there are maximum deductible limits. So before 2024, those limits for interest on the mortgage have been different from period to period. So basically, the first 5 years in your home, it was 3,000 euros per person. Between the 6th and the 10th year in your home, it was 2,250 euros per person, and afterwards it was 1,500 euros per person. Now it changed. So basically, there are different changes here. One of them is the difference they are making now between availability date and date of moving in. We will see this in a minute. But basically now, starting from 2024 on, so the tax return you will do this year for last year, the first 2 years after availability date, there you can deduct interest without any maximum deductible limit, which changed a lot. Then 3 to 7 years after availability date, you can deduct 4,000 euros per person in your household. So if you are a couple with 2 children, it will be 4 times 4,000, 16,000 euros that you can deduct. From the 8th to the 12th year, it's 3,000 euros, and after the 12th year, it's 2,000 euros per person. We will see different examples in a minute. Here's one already. So basically here, the availability date for this family, when they moved into a new construction, was on May 15th last year in 2024. So for the tax return 2024 and the tax return 2025, they can fully deduct the interest that they have paid on the mortgage during those 2 years. On the tax return 2026 to 2030, it will be capped at 4,000 euros per person. On the tax return 31 to 35, it will be 3,000 euros capped per person. And after 2036, it will be 2,000 euros per person. Of course, if by then the Luxembourg state has not changed those rules. So I talked about the availability date. So basically, what's the availability date? Before 2020, before 2023, it was quite easy. Availability date was the date you were moving officially into your new home. So it was the date when you went at the commune to register. So if you moved into your home before 2023, here the availability date, it's still the move-in date. So it's like on your tax returns for the last years, you just mention when you moved in, and then the maximum deductible limits will automatically apply. So here's an example. If you moved in 2018, the availability date is still 2018. Since 2023, however, there is a change in the definition of the availability date. For example, for new building, if you bought what is called a FEFA, so a new building that has been constructed, the availability date, it's a date of key delivery. So basically, if the construction has been done, then you could move in, and that's the availability date that you have to mention on the tax return. For an existing property, so basically a house that already existed, that was habited before you buying it, if the house is still in a good condition, so in that case, the availability date, it's acquisition date. So basically, it's the date when you are going to the notary to buy that house. Even if afterwards you are doing some work on it, new painting or whatever, if the building is habitable, then it's the acquisition date, the date when you are at the notary. We will see this in a minute. If the home that you bought is totally dilapidated, so you have to do major works to live in there, then it will be the move-in date that counts as availability date. Here you have a little bit more information about this. So you are buying an existing construction, so a construction that was already habited before. Then the availability date, if that house is in a good shape, availability date equals the date of acquisition, so the date of the notary deed, even if you are doing a little bit of repainting, wallpapering, changing floors or whatever. However, if you are buying a dilapidated property, and what does this mean? Basically, this means that really complete renovation is required. You had no heating when you bought that house, no basic sanitary, no toilets, no kitchen, no windows, whatever. In that case, you have to renovate before you can move in. And then the availability date here, it's the completion date of renovation when basically the renovation work is done. You have to prove that the house or the apartment you bought is dilapidated, and it's quite complicated to do so. So I would suggest just take the most pictures possible. You need the most proof possible to show to tax administration that this building was no longer livable, and then they will decide what they will do. It's important to check on those dates because they have also an impact on the deductions during the renovation, for example. This is what this slide is about. So basically, if you're buying a new property that is still under construction, during the time of construction, you can fully deduct the interest you are paying on the mortgage. So as long as construction is not finished, you can, without any cap, deduct the interest you're paying on the mortgage for this new building. If, however, you are buying an existing property that was inhabited previously, and basically the condition of the building was okay, you are maybe doing some renovations, new painting and so on, but it was not dilapidated. At that moment, there is, at the moment of acquisition, you have to apply to the different maximum ceilings that we have seen a few minutes before. However, if the house or the apartment was really dilapidated, and you can prove it, then during the work to get this apartment or this house in shape again, during that work, during that renovation period, you can fully deduct the interests you have on your mortgage. We will see a few examples in a minute. When you are buying property in Luxembourg, a home, you can deduct other expenses on the tax return for the year of acquisition. So, for example, the bank fees or bank commissions for the credit opening. Normally, a Luxembourg bank, they will invoice you around 500 to 5,000 euros based on your file as bank fees. Those you can add them on the tax return and deduct them and save on taxes. The same for notary costs, but only notary costs for the mortgage setup. Basically, in Luxembourg, when buying a property, you normally have two invoices from the notary. The first one is for the acquisition itself. Registration tax is this called. That one is not deductible, but the notary is also needed to set up the mortgage, and that bill will be deductible. Normally, it's around 2,000 to 3,000 euros, more or less. On that invoice from the notary, it will be mentioned credit opening or ouverture de crédit in French. That one you can deduct it on the tax return and save on taxes as well. A few examples. So here there's a family with two kids buying their main residency. It was an existing property, so there was already someone living in there before them. So they bought it the 1st of February 2024, and 2 months later they officially moved in. Here you can see the interest that they have paid or will pay over the next years, and they had a total of 6,000 euros of bank and notary fees for 2024, so for the year when they bought that house. Here the availability date, it's the acquisition date, because basically it was an existing property and they could move in very, very quickly. So for 2024, they can deduct fully the interest they have paid on their mortgage, so the 30K, plus the 6K for the bank and notary fees, so a total of 36K, and they would save a total of 15,000 euros in taxes, so quite huge amount. For 2025, the same. It's a second year after acquisition date, after availability date, so there they can also fully deduct the interests from their mortgage, 29,000 euros here, and save 12,100 in taxes. And starting from 26 on, there will be a capped deduction, and it is capped for the next 5 years to 4,000 euros times 4, because this family, they have two children, so they can deduct 16,000 euros only, even if they pay 28K of interests in total. Second example, quite similar, same family, they're buying an existing property. It's not dilapidated, but they want, however, do some renovations. So they bought it in 2024. They did some renovations in it for over a year. So they moved only in the 1st of May. They paid interests. They paid bank and notary fees for 2024. So here the availability date, it's still the acquisition date. Why? Because it's an existing property and it's not dilapidated. So it could be habitable right away, but they decide freely to do some renovations. So for 2024, they will deduct all the interest that they have paid for that year, plus the 6K bank and notary fees, so a total of 36,000. In 2025, they can still fully deduct the interest that they have paid during 2025, and starting from 2026, it will be capped to 4,000 euros times the number of people in that household. Another example here, the family is buying an existing property as well, but they can prove that it's dilapidated and they have to do major renovations. Acquisition date, the same, February 2024. They moved in a good year after, when they finished their renovations. Here the interest that they have paid over those years and the bank and notary fees. And basically here the availability date, it's the date of moving in. Why? Because it's an existing property and it's dilapidated. That is why they can, during the availability date here is the moment when the house is again in as good shape that they could move in. So the advantage here is that this family, they can already, for 2024, they can fully deduct the interests because they are still doing renovations and because the house was dilapidated. They are moving in 2025. So of course as well, first 2 years, 2025 and 2026, they can fully deduct without any cap the interest they have paid. And starting from 2027 only, there will be a capped deduction, and here it will be 4,000 euros times the number of people in the household. Quite the same example, but this time it's a new building. So basically, this family bought in February 2024 a new building that was still under construction, and they moved in a year later when the construction ended. So here, availability date, it's the date of move-in, because when they bought that future construction, it was not yet finished. So here they will only move in 2025. So during the construction, which happened in 2024, they can fully deduct the interests, plus, of course, bank and notary fees for the mortgage. And for 2025, after they moved in, and for 2026, they can fully deduct the interest that they had paid. And starting from 2027 again, it will be capped to 4,000 euros per person in the household. So this is basically a big change, a big advantage for people that bought real estate in 23, 24, or are planning to do it right now. It's a huge gift because you are saving a lot of taxes thanks to this not capped interest deduction. A question we hear very often, especially from expats arriving in Luxembourg that don't know the market very well, the real estate market, and that they think that the prices are still quite high. True, prices in Luxembourg are high. However, I will give you a little bit more of information I got from At Home Finance. So At Home Finance, it's the leading mortgage broker here in Luxembourg. They can help you to find a mortgage if you have a plan to buy a home here in Luxembourg. And the advantage is basically that they can go to all the banks in Luxembourg and ask for the best conditions possible and help you to set up basically your mortgage. That's why they are there. Don't hesitate to contact them if you want to have more information. So they gave me a few information about the key interest rates, the evolution over the last 20-25 years. So basically, what changed in 2022 is that the European Central Bank increased by a lot. So basically, from 0 to over 5%, 4.5%, the key interest rate, which basically had an impact on the interest rate on the mortgages as well. They exploded, and now for the last months, interest rates, key interest rates from the European Central Bank are starting to go down again, which makes basically the mortgages less expensive. You can see it here in November 23, for example, the 30-year fixed rates was around 4.68%. It went down, and now we are around 4%. Of course, this is for 30 years fixed rate, so a really long period. If you are looking at it for shorter periods, so for example, for 2 years, the fixed interest rate for 2 years is a little less than 3%, 5 years 3.02, and over 30 years right now, it's possible you can have the possibility to have a fixed interest rate around 3.29. So interest rates are going down. But because of the increase of the interest rates over the last years, basically we can see that this had a huge impact on the real estate market in Luxembourg. So here you can see the evolution of the average prices for houses and apartments in Luxembourg. The source is official from the Observatoire de l'Habitat. So from 2019, over 20, 21, 22, prices in Luxembourg were exploding. Basically, interest rates were very low. There was a huge demand on the market, so prices went up by a lot. When inflation increased, and the European Central Bank increased as well the interest rate, getting a mortgage became more expensive. So basically, the demand on the market went down, and prices did the same. So basically, over the last 2 years, there is a drop in prices, and now we are basically stabilizing. The market is stabilizing itself, and we are probably on the bottom of this fall. So is it the right time to buy a home? There are different arguments that can confirm this. Basically, interest rates are decreasing over the last months and will probably continue to decrease over the next months. The real estate market is stabilizing, so basically prices are at the bottom, and probably they will increase with the decrease of the interest rates. And those new tax benefits that can reduce your tax burden also makes it very interesting, because you can deduct a lot more interests now if you are buying a home in Luxembourg. How can that home finance help you with this? So if you want to know if a mortgage is possible in your personal situation, you can contact them, and what they can do for you is something they call a finance check. So they will check your income situation, and then they can give you feedback about how much a bank would give you as a mortgage. So this could be a nice information already to check if in what category of price you can look for an apartment or a house. And it gives you also some proof when you want to buy this, so you know that probably a bank will give you that amount of money. So don't hesitate to contact them. The service is for free, so they can help you to get your project done. Other deductions that you can claim for on the Luxembourg tax return that are related to your home or to real estate in general. Basically, one thing you can deduct on the Luxembourg tax return, it's a home savings plan. What is a home savings plan? You can see a home savings plan a little bit like a savings account. It's a savings account where your money will normally be blocked for 10 years. And after 10 years, you can get this money, and you have to use it for an acquisition, a renovation, or you can also use it to pay back on your mortgage for your main residency. What is the advantage? But basically, the money you are investing there is tax deductible. So if you have here an example, so there's a maximum ceiling. The maximum ceiling is 672 euros per household member, but it's doubled if one of the parents is younger than 41 years old. So here in this example, father 40, mother 38, 2 children, they could deduct the maximum of 4 times 672 euros times 2, because it's doubled. So a total of 5,376 euros that they could invest in the home savings plan, deducted on the tax return, and they would save around 2,240 euros in taxes. So basically, the return on invest each year, thanks to these tax savings, are already 42%. So a super interesting investment product without any risk, because basically home savings plans are bank products. So there's some protection on the capital you are investing there. If you want to have more information, you can always reach out to us. We can help you to get this type of a contract prepared for you. When you are buying a home in Luxembourg and when you are contracting a mortgage, there's very often the bank will ask you for an outstanding balance insurance. What is an outstanding balance insurance? Basically, it's a life insurance that covers your mortgage. So you are signing up for such an insurance. If something would happen to you, if you would die or if you would be disabled, then this insurance would cover maybe your entire mortgage or just part of it. It depends on the contract that you have signed. It's a good way to protect your family. So basically, let's imagine you have children and you are buying a property together with your partner. One of you would die. The question is, does the partner that is remaining still can pay back the mortgage? If not, they will probably have to buy if something would happen to one of the parents. An outstanding balance insurance could cover this situation. So basically, if one of the two would die in an accident, for example, the insurance would cover part of the mortgage, and the remaining person, would not have financial trouble. So this is often asked by the banks, but it is also something that is highly recommended to do, because it absolutely makes sense. When you are discussing with your bank or your insurance company about this outstanding balance insurance, you need to know that you have different possibilities to pay for this insurance. So you can opt for an annual or monthly premium, or you can pay in one shot the entire insurance for the entire duration. The coverage from the insurance is exactly the same, but the difference is the tax deductibility. So if you are paying it in an annual with an annual premium, then what you are paying, you can deduct it in the same category than other insurances. So for example, your car insurance, private healthcare, and so on. The maximum ceiling in this category on the tax return is 672 euros per household member. So this family, father, mother, 2 children, they could deduct in the insurance category a total of 2,688. If this family has 2 cars, private healthcare, maybe another life insurance, very quickly they will be over this maximum deductible limit. And in that case, you cannot get any tax benefits out of an outstanding balance insurance. However, if you are paying this outstanding balance insurance in one shot, single premium, then the tax law has other maximum deductible ceilings. And basically, those ceilings depend on the number of adults in the household, number of kids, and the age, because there will be an extra 8% deduction per year over 30 years. So in this example, father 40, mother 38 with 2 children, they could deduct a maximum of 24,960 euros on the tax return if they are paying with a single premium for an outstanding balance insurance. If you want to know how much you could deduct here, on taxx.lu we have 3 simulators, and there's one simulator where you just need to add your birth date, number of children, and then the system will tell you exactly what is your maximum deductible limit in this category. So what's the advantage? But the advantage is that for this family, let's assume they would invest 24,960 in such an outstanding balance insurance, paying it one shot. They could fully deduct this amount on the tax return. And thanks to this, they could save 10,432 euros in taxes. So at the end, you can see this tax savings as a discount on your insurance. Because at the end, the net cost for the insurance will only be by the 24,960 minus the tax savings, so 14,528 euros. And also good to know, single premiums are deductible every 5 years. So for example, you could cover now a mortgage or half of a mortgage with a single premium and deduct it on the tax return. And in 5 years, contract a second insurance, cover the rest of the mortgage, and deduct it again. So you would have 2 times those tax savings. At taxx.lu, we can help you with this. We are partner of Lalux, Luxembourg's oldest insurance company. We can help you to have a better understanding of how this product works. But most importantly, we can give you also a help with a better understanding of the tax gains of the different options you have. Are there other deductions that you could deduct on the tax return? Yes, we are not going into the details. You will find on YouTube other webinars we had organized about this. There will also be webinars over the next months about this. If interested, just create an account on taxx.lu, and then you will get emails when we have those webinars going on. So what are other deductions? We talked already about the insurances that you can deduct. Basically, examples of insurances that are deductible, it's private healthcare insurance, like for example, the one from DKV Luxembourg, the leading private health insurer here in Luxembourg. But also car insurances are deductible, but only the civil liability part, the responsabilité civile. Here in Luxembourg. Another hot topic right now, it's about retirement, because there will be changes most probably over the next years regarding the public retirement plans. So you can also set up a private pension plan, and those are deductible already, and they can help you also to save on taxes now, and you have an additional income when you retire. Basically, you can access that money at age 60. Also, about this, you will find webinars on our website, just about the private pension plan. Very quick about rental income. So basically, rental income, if you have a property that you are renting out to another person, then of course you have to declare this on your Luxembourg tax return. Normally before, you had 2 different forms, the form 190 and the 210. Now tax administration, they merged both. It's one form starting from 2024. it got longer. Before it was a two-pager, now it's 4 pages, because basically tax administration is asking for additional fields that you have to complete. They are asking more information about the rent, about the property, and they're also doing a difference between an existing property that you bought or a new construction. And the main changes are regarding depreciation rates. So depreciation rates, we are not going into the details. I think it would make sense to organize a webinar just about this, because it gets more and more complicated. Before 2021, it was very easy. Depreciation rates were very easy to handle. You see here a table from tax administration explaining this. We don't go into the details, but basically in 2021, 2022, it got already a little bit more complicated, and now it's I would say a mess. So it's really complicated to get through this and to find the right depreciation rate if you have rental income. On taxix.lu, we are helping you with this and your normal tax return. So basically, the goal is always to help you with your tax return, so you can file it in the most easiest way possible. So you have very easy and understandable forms. In the process, you have our customer support that you can contact by chat or by email. And we have also automatic fillings. Basically, you can upload the different certificates and the system will automatically complete your tax return for you. At the end of the process on taxix, of course, you are getting your tax return, but on top of that, you will have an analysis about your potential tax savings. So basically, the system will, based on your tax return, calculate an Opti score, which is a score from 0 to 100. If you are at 0, you have not deducted anything. If you are at 100, you have hit all the maximum ceilings that you can claim for. And you can also get a free call with our tax optimization experts. So basically, during this call, we will go through your tax return, and we will detect together what you could deduct on top of what we are deducting right now, how much taxes you could save, what products would make sense in your personal situation. And we can also help you to prepare those contracts if you want to do this. So this is it for today's webinar. I hope there was some interesting information in it. Don't hesitate to share it with your friends, and stay tuned for other webinars over the next weeks. The tax return for 2024, you can already get it done today on taxix.lu. Thanks a lot, and have a nice evening.